Shares of Bed Bath & Beyond popping on Thursday after fourth quarter profits came in higher than expected. Good quarter, Jason, but what caught my attention was they're going to start paying a quarterly dividend. I don't think you make that move unless you feel like you can deliver on that.
Well, let's hope they can deliver on it. I think the market is kind of questioning that right now. Certainly the market looks forward and I think is wondering really what the future holds for a business like this. Dividend certainly is a nice start. It's a fair question as to how much investors can expect that to grow over time. It's just an interesting sort of situation they're faced with because this is Bed Bath & Beyond as a business has done so well for so long because it served as sort of that place to go find those home furnishings. But as e-commerce has quickly taken over, the competitive landscape has changed significantly just in a short amount of time. But if you just sort of look at the numbers here with Bed Bath & Beyond, the share count, they've done a good job actually buying back shares. Going back to 2011, they brought the share count down 36%. And this is while the share price hasn't really performed all that well either. So in theory, they're getting a pretty decent value on the shares. At the same time, earnings per share have risen around 65%. Okay, so that means that those buybacks are helping, at least in that regard. The problem is it's not translating to a stock price. It's still garnering a multiple less than 10 times earnings. And that's not really a very optimistic situation for these guys. You would think the market might give it some credit and boost that multiple a little bit, but I think the questions about its future are fair. It's not an impaired business, but I'm not actually convinced that it won't be bought out by private equity at some point here.
Well, Jason, it generates $1 billion in cash flow, spends $1 billion in buying shares every year, pays $300 million in capital expenditures. Where's the dividend? So there is some concerns about how is their cash flow going to materialize. That cash flow hasn't really grown tremendously over the last 5 years.
Do you think that at least part of what fueled the dividend was an attempt to appeal to institutional investors? Just thinking, you know what, if we start paying a dividend, there's a wider pool of institutional investors who will at least kick the tires on our stock.
Perhaps. I don't know that would really be a selling point on the stock. I think really what they're trying to do is look at it's a relatively mature company, been around for a while, generates a lot of cash flow. It's not like it's an insignificant business. I feel like maybe they feel like maybe this is just a step in the right direction. We can become a little bit more of a stable, reliable sort of company with a reputation if we are able to offer up a consistent and growing dividend over time.